As we have put out there, our target in 5 years, so 2030 again, is $2,600. And our confidence in that number has gone up now that Tesla is commercializing robotaxis in August, in June. What we don't have in that number, and what is happening faster than we expected, and as you know, we're very focused on learning curves and how quickly new technologies are going to evolve. Humanoid robots. And Elon has been talking about that market being bigger ultimately than the robotaxi market. And he talks about Tesla being number one globally when it comes to humanoid robots, and also says that China is number 2 at 10. So we have to get moving on that score as well. We think that's a $26 trillion revenue opportunity split between home and industrial in the next 5 to 10 years. It's going to be a huge market. And the reason Tesla is ahead of the game is we're talking about the three platforms it's already innovating on. Robots, robotaxis are robots, energy storage, they will be electric, and AI. Those are the three technologies in the humanoid robot movement as well.
Yep, she said it again. ARK Invest CEO Cathie Wood just dropped another bombshell prediction. 2016 was for Tesla. That's nearly a 9x jump from today's price. Wild, right? But is it really that outrageous coming from someone who's been betting big on Tesla for years? Or is this another overhyped call from a fading star? Let's roll back some of her boldest predictions and see how they aged. But first, for those unfamiliar, Cathie Wood is the founder and CEO of ARK Invest, a firm focused on disruptive innovation. She gained fame in 2020 when her ARK Innovation ETF, ticker RKK, crushed the market, fueled by heavy bets on Tesla, Roku, and other growth stocks. Here is an overlay. RKK performance chart from 2020 peak. But what skyrocketed in 2020 didn't stay up. RKK has since dropped more than 70% from its all-time high, turning Wood from a Wall Street darling into a controversial figure among investors. However, let's take a look at her notable predictions. Cathie Wood in 2018. Tesla is undervalued and could go to $4,000. Result? Tesla hit that mark in early 2021, post-stock splits. This prediction was spot on, though many laughed at her back then. The next was Cathie Wood on crypto. We see Bitcoin reaching 500K in 5 years. Result: as of 2025, Bitcoin has bounced between 73K and 108K. Still miles away, but not impossible, yet. Cathie Wood in 2021. We expect RKK to return 20% annually over the next 5 years. Since 2021, RKK has had negative annualized returns. The prediction looks unrealistic in hindsight. Another notable call by the RKK investment CEO was Tesla robotaxi revenue dominance. By 2030, 44% of Tesla's enterprise value will come from robotaxis. Well, still speculative. Tesla FSD is in beta, not regulatory approved. No robotaxi fleet yet. $20,600 by 2030 for Tesla stock. So what's the logic behind this $2,600 Tesla price target? ARK's 2024 Tesla valuation model highlights 2030 bull case, $2,600. Base case, $2,000. Bear case, $1,400. Key drivers, autonomous taxi networks. Gross margins from energy and AI software. Vehicle delivery growth, 20 M cars a year by 2029. Tesla currently delivers under 2 M cars last year. To hit $2,600, ARK assumes exponential growth in autonomous driving and car sales, essentially a full-stack tech company with margins like Apple, scale like Toyota, and AI dominance like NVIDIA. Cathie Wood has received backlash and criticism. Many investors aren't buying it. Some even call her delusional. RKK investors have lost billions chasing innovation. But is that fair criticism, or just a misunderstanding of long-term investing? To be fair, Cathie was laughed at before, and she was right, with 2018 Tesla call now fulfilled. Tesla is expanding in AI, robotics, energy storage, and self-driving software. Elon Musk has said Tesla's most valuable products may be Optimus, the robot, and Dojo, the AI supercomputer. Betting on Tesla now means betting on the future of autonomous tech, not just EVs. So what's the verdict? Is Cathie Wood visionary or overconfident? She's betting on disruption, and disruption always looks crazy until it happens. If you want to argue against her, past success doesn't guarantee future accuracy. Her ETF's underperformance speaks louder than her optimism. Investing requires data, not just dreams. What do you think? Is Tesla on the road to $2,600, or is this another Cathie crash waiting to happen? Drop your thoughts in the comments. Smash that like button if you love bold predictions, and subscribe for weekly breakdowns of the market's biggest moves. Moving to the next stock under the radar, space technology positioning at the center of a trillion-dollar shift. Iridium Communications Inc., ticker IRDM. Iridium is a global satellite communications company, providing access to voice and data services anywhere on Earth. With its constellation of satellites, Iridium's network connects people and devices in the world's most remote places and close to home. Cathie Wood's ARK Invest has recently increased its holdings in Iridium Communications IRDM, purchasing a total of 418,938 shares on April 22 and 23, 2025, in a deal valued at approximately $9.7 million, signaling strong confidence in Iridium's long-term potential despite the stock dropping over 25% year-to-date. Cathie Wood is known for making bold moves, often buying when stocks are falling. Iridium stock is still sliding even as markets began to recover from tariff-driven losses. But here is the main concern. The company is positioning itself uniquely in a niche satellite communications sector often ignored by traditional providers, which fits ARK's strategy of investing in innovative and disruptive technologies. In Q1 2025, Iridium reported better-than-expected financial results, showing resilience and operational strength, although the significant year-to-date decline suggests ongoing market concerns possibly tied to industry competition and broader sector challenges. ARK's large purchase, even amid volatility, suggests a bullish outlook on Iridium's future growth, but you should still weigh the company's unique position, financial resilience, and potential risks carefully before making your own investment decisions. As of the latest trading session, Iridium Communications, IRDM, is trading at $24.08, up 0.04275% from the previous close, with an intraday high of $24.43, a low of $23.10, and a trading volume of 1,951,289 shares. According to Cathie Wood, investors should seriously consider buying Iridium Communications Inc. IRDM stock amid the ongoing tariff war because of the company's unique market position and strong operational foundation. Iridium runs an independent global satellite network that provides coverage in remote and underserved regions, a service that doesn't rely on terrestrial infrastructure vulnerable to tariff impacts. Unlike traditional tech and manufacturing companies heavily exposed to supply chain disruptions from China and other tariff-affected regions, Iridium's business model remains largely insulated. In periods of geopolitical tension, communication security becomes even more critical. Governments, defense agencies, and private sectors increasingly turn to satellite services that guarantee global coverage without relying on foreign ground-based infrastructure. Iridium's trusted reputation, especially among U.S. military and enterprise clients, gives it a competitive edge that tariff wars only strengthen. Financially, Iridium has shown resilience. In Q1 2025, it beat analyst expectations, proving that even during turbulent economic times, the company can maintain steady revenue streams and control operational costs. Despite a stock price drop of over 25% year-to-date, its core fundamentals remain intact. You are not looking at a broken business. You are looking at a temporarily discounted growth asset. The stock is currently trading around $24 niche to mine, well off its 52-week high of $35.85. This gives you a chance to enter at a price that offers significant upside if market conditions stabilize or if Iridium's services become even more critical in a fractured global trade environment. TempusAI is a quiet giant in the health tech space, but if you've never heard of them before, now is the time. Cathie Wood and the ARK Invest team recently spotlighted a game-changing $200 million strategic partnership between Tempus, AstraZeneca, and TempusAI to develop a multimodal foundation model for oncology. This isn't just another AI deal. It marks the beginning of an AI arms race in healthcare. Tempus is contributing over 8 million de-identified patient records, which include clinical notes, genomics, medical imaging, and transcriptomics. These are not just data points, they're longitudinal records that track patient journeys over time, making Tempus one of the most valuable sources of healthcare data in the industry. AstraZeneca, one of the world's largest pharmaceutical companies, is using this data not just to apply AI, but to build their own. They're training custom multimodal models for cancer research and drug development, recognizing that generic, off-the-shelf AI won't be enough to drive innovation. According to RK, at an average value of $25 per record and up to $53 depending on data depth, Tempus's dataset alone is worth $200 million, and that's just the start. Future models could demand hundreds of millions of patient records, and Tempus is uniquely positioned to meet that need. This deal signals a major shift. AI is no longer just a tool for pharma, it's becoming the competitive advantage. As companies scramble to build their foundation models, those with access to the deepest, richest, most well-annotated data will lead. Like NVIDIA did for AI hardware, Tempus could become indispensable to the AI-driven future of medicine. If you believe in faster drug discovery, more accurate diagnostics, and personalized care, then TempusAI is a stock to watch. The healthcare AI revolution has started, and Tempus is holding the keys. The recent activities saw the telehealth company TempusAI share prices surge by over 30% week on week as investors repositioned portfolios ahead of its upcoming earnings release while cheering its newly inked partnership with AstraZeneca and Pathos AI. It is currently trading at $61. Do you think these are good signals? Please like and share, it costs nothing. Thank you, and see you in the next video.